You're now watching the Halftime Report. That was just video of the president at the White House taking questions after a report crossed that's saying that Trump will likely fire Fed Chair Jerome Powell, quote unquote, soon, according to a White House official. The president now saying that is highly unlikely. When we get over to our Megan Casella live in D.C. with much more on this story. Megan.
Hey, Frank, a very fast-moving story here. But first, I did confirm with a senior White House official just in the last hour that the president was indicating he was likely to fire Jerome Powell soon. The backstory there was he had been meeting in the Oval Office with a dozen Republican lawmakers late yesterday. He asked them, he floated the idea about firing Powell. He said now nearly all of them approved it. And the senior White House official said the president then said he was indicating he was likely to do it soon. Now, there was always a caution around that nothing was finalized. The decision could always change. It might not happen, and it might not necessarily be imminent. But then just there, Frank, we were listening to the president sort of downplay this reporting. He was saying that, yes, he's very concerned about Powell and he thinks that he's too late on interest rates. But he said, quote, no, we're not planning on doing anything with regards to firing him. He was then asked whether he was completely ruling out the idea of firing the Fed chair. And the president replied, quote, I don't rule out anything, but I think it's highly unlikely unless he has to leave for fraud. He went on to say he thinks it's possible there's fraud involved in that ongoing renovation of the Federal Reserve building downtown. So here we have it, Frank. At the latest is that while we did have this reporting from a senior White House official saying the president was likely to go through with the firing, now the president saying he's not thinking about doing it, though he's not also completely ruling it out. The final thing I would say is that no official comment from the Federal Reserve on this. But, Frank, as you know, Chair Powell has been very consistent for the last 6 or 8 months or so that he is planning to finish out his term no matter what happens. Just as a reminder to our viewers, he was asked in November by a reporter whether he would step down if President Trump asked him to. Powell replied no. And he was asked in that same press conference whether he felt that the president had the legal authority to either fire or demote him. And at the time, Powell replied, not permitted under the law. Frank.
Our Megan Casella live in D.C. Great reporting on this in the last hour. Just some wild swings when it came to the reporting. Again, Megan Casella, thank you very much. Again, you are watching the Halftime Report. Let's get to our investment committee. Joining us for this hour, we have Joe Terranova, Steve Weiss, and Sarat Sethi. I want to show you a chart right here. Markets are well off their lows now after hearing from the president, but you kind of see the chart of the S&P right there. Took a bit of a dip and now recovered. Right now, taking a look at the state of affairs, the Dow up fractionally right now. That's the chart I was telling you about. The S&P down fractionally. Similar story for the NASDAQ, just very slightly in the red, but some pretty sharp moves after those reports came out again that the president was likely to fire Jerome Powell soon, according to a White House official. Now the president is saying that is highly unlikely. Joe Terranova, I want to come over to you. One of the things that you were watching was the dollar chart. A lot of movement in the dollar. The dollar also rebounding. But walk us through what you think the dollar chart was signaling, or dollar investors or currency investors were saying in response to these reports.
If the president were to fire the Federal Reserve chairman, the two trouble spots that you would look towards would be, number one, the U.S. dollar, as we show that chart. It would resume the decline that we've seen so far year to date, down 9%. Then the other trouble spot would be in the long end of the curve. You watch the 30-year. 30-year spiked up to 5.07 during the news that potentially he was going to fire him. 515 is the high over the last 52 weeks. Those would be the two trouble spots. However, I will say this. I have said this over the last 4 weeks consistently. September 17th, my expectation is that the Federal Reserve will cut interest rates. The president doesn't have to do this. He's going to get what he wants. On September 17th, in the congressional testimony, Chairman Powell identified 2 months worth of inflation data that was important to him. We've got 1 month already. It's not showing up to the degree of which would require him not to cut rates. September 17th, I believe they will.
Let's talk us through this thesis for a second, Joe, and I want to get to Sarat and Weiss in just a second. So you're saying in the July meeting, there's a dovish tone that leads us to that cut coming in September?
I don't know.
Well, just in all fairness, the president not only does he want cuts, he wants the short-term borrowing rate to go down. That could also be achieved somewhat by some signaling from the Fed that they're on the path to cutting rates as soon as September.
They could do that signaling. I'm not sure that you're going to get that signaling because you still want the July CPI reading, which will be reported in August. I think the chairman is going to want the benefit of that data as well. But I believe after that, it is going to show that the inflation is not spiking to the degree at which the chairman feared that it would. And I think on September 17th, they will be cutting rates.
All right. Weiss, Sarat, I want to come over to you guys. We know that the White House does respond to big movements in the bond market. We've heard Treasury Secretary Bessent just mention that they are very mindful of the bond market. Looking at the 30-year, it is above 5%. It has been all day, in all fairness. Steve, I want to come to you first. Your reaction just to that move in the bond market, bond investors reacting to the possibility of Jay Powell being fired.
Look, I think it's like anything else. The market has sort of taken a wait-and-see attitude. We've heard so much come out, going one way, then quickly reversing, going the other way. We just saw it now, where White House sources are saying he's going to fire him, and then he downplays it. So to position based upon that is sort of a mistake. But, you know, let's be clear. He said that he wants to. And I think that has been sacred ground. And you need the checks and balances in government. And that's one of the critical ones. So somebody who just wants to cut rates, number one, to support their tax bill, and number two, to help all their friends around the country, right, similar to what is being done with private equity, is just a mistake. And I'd correct one thing the president said. He said, I don't know how he put Powell in that position when it was Trump that put Powell in the position. So he does know. So bottom line is, I don't think it would be a good thing for the market. Hazard, you know, he's obviously smart, obviously knows his way around economics, but he's also a sycophant. So the pledge any of these people can have to make are to cut rates regardless of what the market's telling you. What Powell has done, he's made mistakes, but I think he's overall done a great job, is that you can't move too soon on these, because otherwise, if you go back the other way, you lose credibility. So it's a wait-and-see attitude. But to me, it's clear that he's going to try to do something.
All right, Sarat, I want to come over to you as well. Again, markets took a dip. They've recovered for the most part, kind of pretty much where they were before this report crossed the wires. I want to talk to you just about how equity investors should respond to even just the possibility of Jay Powell being fired. And by the way, we heard from Jamie Dimon and also David Solomon sitting right here at Post 9 talking about the importance of Fed independence.
Yeah, and Steve's absolutely right. You have a checks and balances in place. So I think right now where the market is, you know, at first, if you talk about Liberation Day and all that, it was, oh, we got a hint something was going to happen. The market reacted. It kind of reacted, a mini reaction, but until we see some action, I don't think the market's going to do anything. But it will do something if that does happen, because I do believe the uncertainty caused by that, and knowing, you know, the unknown as to who's going to take place, what is that person going to do, how low are rates going to go, and really what does that do to the market in terms of the 10-year and the long bond, because that's where a lot of the financing really happens. That's where valuations happen for equities. So I think that's going to be where people are going to be focused on, and the Fed does not control that part. They control the short-term part, which you're not going to. The more you refinance short-term, the higher the rates are going to go long-term. So who's going to win?
Yeah, let me just add to that. Will take control once again, dictating where risk asset pricing goes, and that's not a good environment.
Right. Yeah, let me just add to that. So the market could very well, if he's putting in one of the people that have pledged to cut rates, it could rally in the short term and say, great, rates are coming down. Let's party while the partying's good. And then retribution. That's the equity market. The bond market will be a different situation, as Joe points out. So you see delinking.
It seems like you're kind of spelling out what Jamie Dimon was saying on the earnings call yesterday, basically saying, in short, I think that the independence of the Fed is absolutely critical.
Yep.
Playing around with the Fed can have adverse consequences, the absolute opposite of what you might be hoping for. And if you're the president who's very mindful of the equity markets, which you're talking about, the bond market kind of leading the pricing. Also very important to note, the 2-year, I believe that yield's actually lower than it was before this announcement.
And it should be. The 2-year fell to 385. That's exactly what should happen based on this news. But what's interesting about this, let's pretend that we didn't hear any of these reports this morning, and we came in and we were talking about expectation for Fed policy. Was there anything in PPI or CPI that you saw that you said to yourself, oh, wait a second, the chairman is right, and we should not be lowering rates? I don't think any of that showed up. I think
not even core ticking up to 2.9 year over year?
No, I don't think there was enough evidence. I don't think there was enough evidence not to cut rates at some point in the next 3 to 6 months.
I don't think there's enough evidence to cut rates, because we've seen the date for tariffs keep getting pushed back. Yeah. So while Powell said he needs to see 2 months of data, At that point, the drop dead date on agreements was supposed to have occurred. So we did see also in CPI some tick up.
In the goods, services was weak.
Right. So look, I don't think there's enough of a convincing case, other than the pressure Trump's applying, which I think Powell's immune from, to cut rates right now.